This is Linda Hitt. We're going to talk about the petty cash fund, how to journalize, and what subsidiary records or background records that we'll need to deal with. Petty cash is something that many companies will deal with, and usually is set up to handle small expenditures, either purchasing minor assets or minor expenditures of expenses and so forth. And usually when we do this, we assign one person to that fund. We give enough money to last a month. The petty cashier keeps their own records so that it keeps things simple for the bookkeeper of the main system. They don't have to record every little expenditure during the month. It's kind of done all at one time at the end of the month, reimbursed as well as all the expenditures transferred over to the main system. So hopefully this simplifies bookkeeping, and also we can make small payments quickly. The petty cashier obviously has to know what is allowed to be spent from that fund, and there should be a sufficient money hopefully to last at least a month. Petty cashier controls the funds, keeps track of the transactions, and also locks the cash up. So let's take a look at our short example that deals with petty cash. We have some transactions, and we're going to look at what goes into the main system, the general journal and the general ledger, and look at how that affects your income statement, balance sheet, and cash flow. And we'll also look at the petty cash spreadsheet, which is sort of the petty cashier's records, not the main system, and also petty cash vouchers that can be filled out or should be filled out each time an expenditure is made from the fund. So let's look at the first event, which is to simply set up the petty cash fund with $300, which hopefully will last the month. So this is, I guess, the month of December. So we have a new account called petty cash. No surprise, it's an asset. So we write a check, cash it, give the cash to the petty cashier. They lock it up in a box and have their own records. Since this does go into the general journal, it is affecting our main system. It's an asset exchange because one asset goes up and the other asset comes down. No effect on profits, and for cash flow purposes, cash is being used up, and it's certainly part of the day-to-day, so it's operations. Petty cash spreadsheet is not used until we actually start spending money from the fund. Our general ledger at the end of the month, or with software immediately, would be updated, and we certainly would have a beginning balance in cash, so I'm just going to put that as one transaction. Next, we are starting to pay money from the petty cash fund. We bought $50 of office supplies, so we're very used to journalizing, but here you're going to have to break the habit. There is no entry, so I'll just remind us of that, and no impact on the statements because it's going into the petty cashier's own records. So if we set up a spreadsheet and have column headings of the different categories that we can spend money on, we've got one for office supplies, so I'm going to put the $50 there, and then as we disperse that money, if I received it, it would be written there to me. The date, I believe, got December 1st, and the amount was $50. And then we'd assign an account. We probably had some signatures to approve it, and then if I receive it, I would actually sign that part. Okay, so we have the petty cash spreadsheet used and a petty cash voucher filled out and signed by the person receiving the money. Next, we paid cash for postage stamps for the petty cash fund. Okay, once again, it's not the bookkeeper's issue. There is no entry in the general journal, in the statements, general ledger, etc. So the petty cashier would be handling this through their own records. So the postage stamps, we have a column for that, so we'll enter that. And then we'll find another petty cash voucher. So if we're paying the post office, it would go to the post office. The date for this particular payment is December 5th, and the amount that we paid out looks like $70. And again, we have the other information filled out. Next, we're paying for overnight shipping for something from the petty cash fund. Once again, it's not in the general journal, general ledger, or the trial balance, or statements. The petty cashier pretty much runs the business during the month, and everything is documented in a separate system, hopefully with just as much control and organization as the main system. So overnight shipping, I guess we have that as a separate category. Maybe we want to see if we spend too much at overnight shipping, or to control those costs. So we enter it into our spreadsheet, and the petty cash voucher would be filled out. And let's say that Jane is the employee, took it to FedEx or wherever to have it shipped out, and it's December 7th, I guess, if I'm reading it right, or December 6th, rather. Oh well, I guess it doesn't matter. So we have that information, and then the usual information assigned. Actually, it's December 9th. All right, I'll switch that. Okay, so back to the transactions. We did minor repairs on the computer and spent money again. You can see the pattern here. Nothing goes into the journals. The bookkeeper is not bothered with the daily transactions from the petty cash fund. So we, as the petty cashier, would enter it into our system. We do have a minor repairs category. So I'll put the $100 there, and the petty cash vouchers we'd fill out. So the amount was 100. Let's say Jim Jones is the recipient of the money. He's the repair person, and the date for the repair is December 15th. Okay, so again, that's filled in, and the spreadsheet for the petty cashier is filled in. So now, finally, we're down to the end of the month. We've had enough money to last us, which is the goal, certainly to put enough money in, but not too much. And we basically have counted what money we have on the petty cash fund. So one thing we want to kind of check is to see if we actually have accounted for everything. So if I take everything in the petty cash fund and just total things up, I guess let me start here. If we do an auto sum of each column, it's a little overkill. You don't have anything in the columns to sum, but let's pretend we do. So if we add these up and then we total our spreadsheet, again with the auto sum, then we should be able to document exactly how much we spent this period. So apparently we spent $250 and we've counted 45. So if we do our calculation, we've accounted for $45 of currency and cash left over, plus vouchers that total up to $250. So we've accounted for $295. The only problem with that is if we go back to the beginning, we have $300 that we started with. So $300 to account for, but we've only accounted for $295, means that we're $5 short. So without documentation for that, we're going to pick up cash short and over. This is a new account. If you debit cash short and over, that indicates that it is an expense. If you credit it and you're over, that would actually be a revenue. And then now we can actually go through and record everything that's been spent. So office supplies can be recorded as an asset like we've done before. It doesn't have to be all expenses. And then we have postage stamps. Postage, probably you're better off to expense unless you want to count postage stamps to see what your expense is. I don't think you want to do that. So let's put 70, and these are all debits. Assets are debited, expenses are debited, so it's going to be a giant compound entry. And then minor repairs expense. Of course, we have the chart of accounts we could take a look at to get these. And shipping expenses we didn't use actually, but we did use the overnight shipping. So we'll make that an expense. Oops. and that's for 30. And I think hopefully we got all the, yeah, there was 4 different totals, and we've got 4. And then we would, there's a couple possibilities. Let's do it the longer way first. We could credit petty cash. So this entry would just be how much has been spent, and let's record the assets or expenses from this fund. So if I then total everything up on the debit side, then hopefully that's going to help me with the credit. So I have $255. I'm going to credit that. And that makes sense because $255 plus the $45 on hand now does tie back to $300. Okay, so we definitely need to enter this into our system. And let's see if we can do this. Let's get all the assets put together, and then we'll look at the expenses. So we may or may not need the calculator for this, but on the asset side, we have office supplies and we have petty cash. So if I do petty cash minus the office supplies, which is 50, then I've got $175 being decreased from the assets. So let me put minus 175. Okay, and expenses. Expenses, of course, are part of retained earnings, so that's going to cause stockholders' equity to go down. So next, let's add up our expenses. So we have cash short and over for 5. Oh, yeah, okay. We have postage of 70, and minor repairs for 100, and overnight shipping of 30. So that's 205. Okay. Minus 205. And I think somewhere I made a mistake. So let's look at this again. It should be, let's see. Yeah, cash short and over. Let's go back to the asset side again. If we have office supplies of 50, and then we only have petty cash going down for 255. Okay, this is where I made the mistake. So assets are going down by 205, and I'll just make minus stockholders' equity 205. Okay, so both sides are going down. That balances the balance sheet. And the expenses would certainly cause net income to go down, which we've already figured out is 205. So let me put this at the top. A little hard to see, but anyway. And cash flow is not affected in this entry by the way we've done this. So that would be the first transaction. And then the next transaction, if you do it this way, would be that to reimburse the fund. Put $255 back in to add to the 45 to get us to 300. So the second entry would be debit petty cash, 255, and credit cash. Okay, and this entry, as you can tell, I'll squeeze it in right here, is an asset exchange. So it's, or I'll put it right below, how about that? Plus petty cash minus cash. So it's balances out there. No change to profit, and the cash flow statement, we would be reducing cash for $255, and this would be part of operations. So we have 2 entries dealing with petty cash, and if we update, let's see, doesn't affect our petty cash spreadsheet, that's just for what we've spent. But the petty cash account, in the first entry, we credited petty cash for $255, and so this brought the balance down to $45, which is in fact the cash on hand, what we had over here. And cash would not be affected in the first transaction. And then in the second transaction, for number 6, we see that petty cash now is being debited for $255. Okay, so if we look at our totals, of course the debit and the credit for $255 offset, so the ending balance is $300, which is what we want. We want it to bring it back to where it was. and then the cash account would go down by 255 for the expenditures that we've made. You can shorten this. You could make it two separate journal entries, just like this, where we deal with recording everything in the main system, then reimbursing it. But to shorten it, what you can do, if you look, we have a credit to petty cash and a debit to petty cash. Those two offset each other, so what you could do is simply credit cash in the first transaction and not do the second transaction. And that would give you the same end result. Your cash would be going down, and your petty cash would in fact be 300 because it would have been 300 to begin with. So that's another possibility. And as you can see with the transactions, most of the events were not recorded in the general journal. They were simply put on the spreadsheet and also on the petty cash vouchers. Once the vouchers are reimbursed, then we would simply go through and stamp all these things paid, and they'd be filed away. So if we ever needed to go back and reference anything, we'd have that. And your spreadsheet would have the information as well. And then you start all over again. You have 300 in your account, and the petty cashier would make the usual expenditures. So it works out really very nicely, keeping those records separate and assigning one person to that.